Hello and good afternoon. So thank you so much for the feedback on the video yesterday. Because of that, we're going to review the short on crude oil. In these charts, we have the volume profile from 5 different equities. And this chart here below is linked to the watch list. So let's go to crude, maximize the chart, and let me explain it. So let's go 30 days, 30 minutes. And based on the long-term trend of crude that we reviewed yesterday, we know that it was down for the last year and a half, and we are seeing relatively weakness during the last few quarters. What caught my attention was this Monday that I was thinking it will take this low, and it did not. It was a very strong Monday, followed by a gap up, a strong follow by a third day with a gap up, then consolidation on Thursday, and then another gap on Friday, close or printing higher highs here. So I was thinking, okay, so maybe if this is a short-term push from short covering, fine, it's over. Maybe we consolidate here and we settle around 66. However, Monday morning, I encountered this gap, it was very strong. It was similar to the last Monday. And then the 30-minute candle here, it was quite bearish. It traded to the low, value area low, and around this time, half an hour before the end of the day, I was thinking, this is not as strong as I was thinking. It should have been able to consolidate it here. So now why are we closing at Tuesday's level? So I was thinking, okay, so probably this was not new buying, this was short sellers just being forced out of the positions. And then we took the short. This trade was expressed both in futures and a leverage ETF that we're going to discuss now. And I want to highlight the value of these charts for me. First, there is no real-time pricing on or candles here. You cannot know, except from this value here, what is the current price of the instrument. We have the value area low and high, and the day high and low, and the POC. That's it. And then a volume profile here for the entire duration. This provides context, and it forced me to understand what's going on throughout the day. So here we have a P shape and then a gap up. It was a consolidation and a new value area, but then the following day we had another consolidation higher. And here it took the previous day high, and you have 3 little very distinct profiles or shape in the profile, which was totally the opposite of the letter B from Monday, right? Let me change this for those that are not used to volume profile to normal candles, so you can see what I mean. So remember, oil was trading around 78, the high, and then in one day it collapsed all the way to 66. And from that day has been having trouble to continue higher. If we focus on this area here, let me focus. And let's remove extended hours. So here's the gap. See? And if we do the same here, let's do 5 days. And here we remove extended hours. So this is the Friday's low. It pushes higher, then it consolidates a little lower. Next Monday, gap down. This is the strong candle. Okay, this is 15 minutes, but 30 minutes is lean, so it's even stronger to the downside. And in this push, here I was thinking, okay, this is not as strong as expected. Let's go for a short. And then I want to show you. So if we put extended hours, with extended hour sessions, if we zoom into this, look at the shape of this candle. This is a no conviction, looking for direction candle, right? It's very different than this was push higher, push higher, push higher. Here we have a direction change, no conviction market, then at the push lower, right? So let me show you how this was executed with a leverage ETF. And allow me to introduce a trade journal that I've been using. And this is not being paid by TradeZella or anything like that. This is just helping me to save some time while recording the executions. I used to do it manually, and now with this is much cheaper, faster. Sorry. So here we have an inverse ETF. Is SCO. The higher it goes, the lower crude oil trades, right? So if we change this to 15 minutes, we can see here near the end of the day, we enter, and then we're continue to hold this trade for today. So some of you might say, hey, how long are you going to hold? So there are two ways you can do this. So one is a VWAP for multi-days that will follow the price. The other one is moving the stops manually to the lower low of the next candle. As you know, these products tend to trade in large cycles. Let me go back to Thinkorswim. If we maximize this, I can explain better. So this push higher was from May, a month, right? A month. This push low here was from the end of July to the middle of August. So this is about 15 days. Can we go back to this low? Yes. Can this 62 be broken? Yes. Can it be broken? If we consolidate here, it's a reason to trim, and I will trade accordingly. So thank you so much again for the comments yesterday on the video, and I'm happy that I got the time to answer that question with this. By the way, if you want to download my market profile link, I'm going to put it here so you can get this template. I can share this template, and I will create a link for you to be able to download this. I think it is valuable. Thank you so much, and with this I conclude the video. Bye bye.